The 16th largest bank in the country just failed. It's the second largest bank failure since 2008. And if history were to repeat itself, we should see a housing crash right now. Or not. Hi, I'm Eric Whitener with the Knox Real Estate Group, and I want to break down what I'm seeing in the housing market and how the current economy is affecting it. So to start off, let's talk about Silicon Valley Bank and its failure. A lot of people are speculating that a housing crash is imminent because in 2008, that's what we saw. We saw banks fail. But the reason why those banks failed and the reason why this bank failed are completely different. The difference between today and 2008 when it comes to bank failures is that in 2008, the bank failures were caused by poorly written loans. We all know subprime debt was a big reason for that. But that is not why the Silicon Valley Bank failed. It failed for other reasons, a lot of it stemming from the fact that the Federal Reserve has raised interest rates to a much higher level in a short period of time. So currently, the reason around the two failures are very different. Now, let me tell you how this failure actually has helped some consumers in today's market. Since the failure happened, mortgage rates have actually come down because, oddly enough, bad economic news typically means lower mortgage rates to follow. Just like when we hear reports of inflation slowing down, we will see mortgage rates fall. That typically, everybody talks about a recession, and in a recession, mortgage rates typically fall. So that's actually a good thing for today's home buyer because one of the biggest problems we're having is affordability. One other thing that happened in 2008 that's very different than today's market is the massive amounts of inventory. So there's really two things that make up a real estate market. There is housing supply and housing demand. And if supply outpaces demand, home prices either stagnate or fall. And if demand outpaces supply, typically home prices will elevate. That's the difference between a buyer's market and a seller's market. Even this article from HousingWire.com shows that mortgage rates fall after the SVB failure. Looking at this mortgage rate chart from MortgageNewsDaily.com, we can see that as of 3/9, rates were at 7%. Fast forward to today, on the 13th, rates are just over 6.5%. So we've seen a 0.5% fall in mortgage rates on the 30-year since this failure happened. The bottom line is bad economic news is typically really good for mortgage rates. It means mortgage rates will come down. So mortgage rates are coming down, and that's a good thing for home buyers. But there's still another issue that is on the horizon, and that is inventory. Right now, we're seeing still a trend of low inventory in the marketplace, and a big part of that reason is because homeowners who would possibly make a move and put their home on the market are not. Why? Because they have a super low interest rate. That effect is called the mortgage rate lockdown. They're not going to sell this house that has a super affordable payment, even though they have a ton of equity to put on their next house. They're not going to switch homes and take on a 6.5% interest rate. So they're holding on to that property even longer. So that's a lot of inventory that's not hitting the market. The other part is we don't have an influx of foreclosures like everyone was expecting we were going to have. And the fact is today's homeowner has the most equity and is the most credit worthy of any homeowner in the past 20 years. So if they were struggling to make their home payment, they could just sell it. Lastly, new construction, and this was a big one back in 2008. New construction, while there was quite a bit of it in the last couple of years, it was not to the level we had seen pre-2008. And the fact of the matter is the majority of it got absorbed, except for in areas such as Austin and parts of California and Las Vegas. Those areas built at a much higher rate. And when you hear people talk about home price depreciation, keep in mind they're talking about the market as a whole, or they're talking about other specific markets. We're not seeing any of that here because our inventory levels are nowhere near what they were pre-pandemic. Looking at this chart shows you how back in 2008, we had roughly 15,000 homes on the market covering our whole greater Knoxville area association of realtors. That's about 12 counties worth of homes. We had about 15,000 back then. Fast forward to 2020, we were down below 2,000 homes, and in 2021, even less. Okay, so significant reduction in inventory. Fast forward to today, and we've been averaging anywhere from 2,800 to 2,900 homes on the market. Again, in 12 counties, we're averaging somewhere between 500 and 600 homes just in Knox County. That is not a lot of inventory. Now, new homes come on the market every day, but they're absorbed by the buyer demand that is looking for that inventory just as fast. The bottom line is even at today's interest rates, the demand for housing way surpasses the amount of inventory that's coming to the market. So in conclusion, if you're thinking, hey, is now a good time to buy or is now a good time to sell? I'll give you my best answer. It depends. It honestly just depends on your situation, your motivation for making a move. Do you currently rent? Is your rent going crazy like it has been for the last 2 years, and you're ready to become a homeowner and start gaining your own equity? Then maybe now is a good time for you to buy. Are you a homeowner and your home isn't fitting your current needs anymore and you need to make a move to make your lifestyle better? Then now is a good time to have that conversation. This may be the best time to sell your home. If you have questions about whether or not today's a good time for you to buy or sell, we would love to have a conversation with you and help you determine what is best for you at this current moment, or create a game plan on what it will look like in the future. I'm Eric Widener with the Knox Real Estate Group, and if you have questions about the local real estate market and if now is a good time for you to make a move, just reach out to us. We'd be happy to have that conversation.